Bitcoin found a low for now around $80,000. On the last show, I told you guys, it could fall to 85, it could fall to 80, it could fall lower. I don't know. This is not the top. What 126 was not the top. It's not the end of the cycle. And so we did find somewhat of a low for now around that $80,000 number. It's very difficult for Bitcoin to continue to go lower and lower and lower and lower when you've seen this level of capitulation and distribution, okay? Bitcoin is not slowly bleeding down. It's not struggling to find momentum. I fundamentally believe that we are, the overall market is trying to...
Bitcoin didn't crack so much as it snapped through a temporary pocket of illiquidity, and Jack Mallers argues the data proves it. At a price near $88,700, about 29% off the all-time high, he reminds viewers that these pullbacks are textbook behavior in a maturing cycle, not signals of a cycle peak. With more than 5% of the entire Bitcoin supply changing hands during the drop, Mallers sees classic capitulation, forced sellers washed out in a tight market, clearing the path for stronger hands to step in. Jack Mallers highlights the critical data behind the recent volatility, particularly the extraordinary supply distribution during the drop. Over 5% of all Bitcoin changed hands between 83K and 86K, a level of forced and panic selling that he views as classic capitulation. This kind of concentrated transfer, according to Mallers, makes it increasingly difficult for the asset to grind lower because weak holders have already been flushed out. Jack Mallers also points to Bitcoin's extremely low implied volatility as evidence that the cycle has not reached peak price discovery. Historically, volatility spikes when the market is topping or violently unwinding, yet the recent decline showed none of that behavior. Even during the sell-off, implied volatility remained muted, which Mallers interprets as a sign that the move was less a structural reversal and more a short-term dislocation in thin markets. For him, the combination of capitulation volume, liquidity distortions, and subdued volatility signals that the bull cycle is still intact and the top remains ahead. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.
So let me pull up the Bitcoin price. Because, ladies and gentlemen, I'm talking to you at a price of $88,720 US. That puts our market cap at 1.77 trillion. Our all-time high remains at 126,160. We made that all-time high now 49 days ago on October 6, 2025. We are less than 30% off that high now. We are at 29.5% off our all-time high. Bitcoin block height. What was the last Bitcoin block mined before I hit stream? It was Bitcoin block 925,057 for those keeping time in Bitcoin block heights. How the hell are we doing? You guys panicked, you stressed. Bitcoin's crashing. AI's falling apart. The world's freaking out. Have no fear. The Jack Mallers show is here. Hey, but I'm not a rapper or a podcaster. Let's get into it, ladies and gentlemen. Chapter 1, understanding Bitcoin's price action. So Bitcoin found a low for now around $80,000. On the last show, I told you guys, it could fall to 85, it could fall to 80, it could fall lower. I don't know. This is not the top. What 126 was not the top. It's not the end of the cycle. And so we did find somewhat of a low for now around that $80,000 number. We have since bounced quite a bit. There's a lot that has happened. I want to walk you guys through the data because a lot of people seem to have found value in my liquidity vantage point, how I was viewing the cycle, how far we are off from highs. I've been in Bitcoin for 13 years. I've seen 30% drops from highs, and then we rally further. My favorite memory was in 2017. First slide, supply distribution. So this from the rational root, more than 5% of all Bitcoin changed hands during this drawdown. Guys, let me repeat that for you. More than 5% of the entire Bitcoin supply changed hands. Look at that spike between 83K and 86K. This, guys, is what we want to see. This is forced selling. This is panic selling. This is capitulation. It's very difficult for Bitcoin to continue to go lower and lower and lower and lower when you've seen this level of capitulation and distribution, okay? Bitcoin is not slowly bleeding down. It's not struggling to find momentum. I fundamentally believe that we are the overall market is trying to sort out what I would call liquidity dislocation. When the U.S. government runs a $200 billion trade surplus in September, which implies that we run a $2 trillion trade surplus annually. We know that's not true. We know that's gimmicky. That was very likely to try and fill the TGA, the Treasury General's account. Then, for the government to shut down, again, that was very helpful in drying up liquidity and concentrating it in the Treasury General's account. And so I think that this is liquidity dislocation, extreme tightening in a really weird time that was fairly unexpected. This was an unexpected event. Next, let's look at Bitcoin's implied volatility. I just want to show you guys, I'd given the speech at the strike offices as well. The implied volatility is extremely low, and this is relevant for a few reasons. For one, this kind of solidifies this idea that Bitcoin has not reached peak price discovery all-time highs. Our volatility, if you look at our volatility, this goes all the way back to 2022. You can see in early 2022 that extreme peak implied volatility was when we were setting all-time highs. Jerome Powell went on and hiked rates as fast as they've ever been hiked, crashed all markets, rendered banks insolvent, FTX imploded, so on and so forth. We've been at relatively low volatility since then, and even on this flush, even on this decline from all-time highs. And the reason I want to reference that and bring that up is usually you see extremely high volatility on declines, like when the market is puking, and we didn't. And so again, this to me looks like it was forced selling, an extremely illiquid market.
Jack Mallers breaks down the unrealized profit and loss data to show that the recent dip is not a sign of euphoria bursting but a classic mid-cycle anxiety phase. The color-coded sentiment bands green for belief and denial, yellow for hope and fear revealed a sharp plunge in unrealized profits as Bitcoin dropped around 30 to 35% from the highs. Mallers points out that this same pattern appeared during Liberation Day earlier in the year, when both stocks and Bitcoins sold off hard before roaring to new highs as liquidity returned. He argues that what we're seeing now is the same dynamic, not capitulation, not a cycle peak, but temporary illiquidity caused by distorted macro conditions from a gimmicky U.S. trade surplus print to a government shutdown and strained repo markets. Mallers emphasizes that the selling pressure has come overwhelmingly from short-term holders, not true long-term OG Bitcoiners. Data shows a massive spike in short-term holder realized losses nearly as extreme as the FTX collapse in late 2022, indicating that speculative traders and momentum chasers exited their positions in panic. These aren't the deeply convicted holders from earlier cycles. They're tourists reacting to volatility in a tight market. Meanwhile, long-term supply remains firm, and ETFs, corporate buyers, and public companies continue to provide the exit liquidity that makes such temporary sell-offs possible. For Mallers, all of this reinforces the same conclusion. This is not a blow-off top or the end of the cycle, just a brief liquidity shock shaking out weak hands. Let's get back to the interview.
Bitcoin unrealized profit and loss. So what are you looking at? The black is Bitcoin's price. Red, orange, yellow, green, blue. Those signal in color different feelings, market structures throughout price action. So what we're looking at in green is belief and denial. So effectively, cut to the chase. Can you guys see my cursor? Do you see this massive dip in sentiment right below the price? That is extremely profound. So what this is showing us is the percentage of unrealized profit versus loss across the entire Bitcoin supply. And we dropped substantially, which means that a lot of unrealized profit evaporated. So we're not in euphoria and greed. We're not in denial. We're not in the hope and fear. This is very much par for the course for a mid-cycle anxiety zone. 30, 35% off the highs. Guys, this is exactly what we saw in April. Do you guys see the break between green and yellow back here in April? That was Liberation Day, Liberation Week. Stock market down 20%, Bitcoin down 35% from highs, everyone screaming for a Great Depression. And then all of a sudden, liquidity came back and we rallied to 126,000 in Bitcoin. The stock market made new highs and everything was fine because they printed the money. They printed the money. And so again, this to me is not a red capitulation. I don't see the color orange of extreme fear. This very simply is anxiety. This very simply is illiquidity. Next, the IBIT ETF flows. Let's look at the outflows. So what are you looking at? The orange line is Bitcoin's price, and the green is IBIT's flows. You can see they've gone negative. You've probably seen some headlines like, oh my goodness. IBIT made record outflows. Institutions don't love Bitcoin anymore. The outflows are on par with when? With Liberation Day, with earlier this year. Nothing to worry about. There have been structural inflows this entire time. We also talked about the carry trade. When the carry trade unwinds, you see outflows in the ETF. If anything, all of the tourists have exited the IBIT product. So what we'll talk about is short-term holders, speculative traders. They have been washed out and really they realize their positions as losses. But if you zoom out and you look at the IBIT product, it's fairly straightforward. When there is no liquidity, Bitcoin reacts the most. When there's liquidity, Bitcoin reacts the most. We went through this very weird liquidity dislocation with a government surplus in September and a government shutdown. The repo markets are extremely strained, which we'll talk about in a second. Japan is blowing up. Literally, Japan is acting like an emerging market, which we'll talk about in a second. And so Bitcoin, very simply, is the liquidity smoke alarm it was designed to be. The IBIT flows are nothing to be concerned about. We are just going back to Liberation Day outflows because there is no liquidity. It's all a good thing. That's the other thing about this metric, by the way, guys, is that people say, OGs are dumping, OGs are dumping. But you look into the data and it's like an OG is someone who's been holding Bitcoin for 3 years. It's like, that's an OG? It's as if like the people from 2010 are selling all their Bitcoin and now you get all this FUD about quantum, all this bullshit. And none of it's true. You look into the data and that's not an OG. Like I think of an OG 2015, like pre-SegWit, pre-2017 bull run. Everyone has their own definitions, right? But anyway, just wanted to make that point. I digress. They're selling into, weirdly, weakness, which is a little bit interesting. Again, is it 4-year cycle speculation? Is liquidity so tight that people need to rotate capital? Or, like we talked about before, is Bitcoin going through its IPO moment where these holders finally have the liquidity to exit? Where before, selling 80,000 Bitcoin was impossible. You'd move the market too much. And so now that you have these ETF flows, the corporate flows, the public companies buying loads and loads of Bitcoin, you have exit liquidity where you get to see some distribution. But again, the point of this visual, this is not a blow off top. This is not the end of a cycle. All of this data points very firmly to a brief stretch of liquidity dislocation, of liquidity stress, of forced selling, and of panic selling from short-term holders. Because look at this. This is short-term holder realized loss. I'm going to say that again. This is probably my favorite one. Short-term holder realized loss. Take a look at this, guys. Black is the Bitcoin price, the black line. Orange is the short-term holders' realized loss. Look at that spike on the far right. It almost made an all-time high going back to 2022. Now, November 2022, does anyone remember what happened then? FTX. That's when FTX blew up. So fast forward to today, short-term holding realized loss. So these are not real Bitcoiners. These are tourists, people looking for a short-term trade, people looking for momentum, people swing trading, people day trading. These aren't the stay humble and stack satsers.
All indicators point to a Bitcoin market experiencing a temporary liquidity squeeze rather than signaling the end of its cycle. The sharp drop in unrealized profits, the surge in short-term holder losses, and the familiar pattern of ETF outflows all mirror past periods where liquidity vanished briefly, but fundamentals remain strong. Long-term holders continue to show resilience, structural inflows remain in place, and sentiment reflects mid-cycle anxiety rather than capitulation or euphoria. The recent downturn appears to be a necessary clearing of speculative excess in an illiquid environment, setting Bitcoin up to continue its broader upward trajectory once liquidity conditions normalize. How do you think Bitcoin will react once global liquidity starts to expand again? Will it return to price discovery quickly, or move through another period of consolidation first? So, stay tuned for clear, data-driven insights into the financial system. Don't forget to like and subscribe so you never miss our weekly updates. Thank you for your continued support, and we hope you enjoy the video.